Hi guys, so I'm going to start a new series called like monthly reflections. So this is May reflections. I'm going to be doing it every time at the end of the month. It's basically just going to be going through one pair or one like indices. I'll be going through the whole month and then looking at trades that I could have taken that's according to my plan. So this is EU, and some of these I actually took and some of these I actually didn't take, but this is just me going through again and reflecting on May. I kind of put it all into the Notion, and I'll just be showing you guys the Notion instead of showing you guys on the charts, because if I show you guys on the charts it'll be really difficult to navigate through like the time frames and stuff, and it would just be very messy and just take a really long time. So I think this is something that you guys can do as well, and then compare this with the trades that you actually took. 13th of May, New York session. So Monday we've got no news, no red folder news. Looking on a daily time frame, you guys can see this is Tuesday, so this candle right here is Monday. So previously this is the action that we got. So what we see here is this fair value gap getting respected here by this candle. So this is the Monday's candle. So for me on Monday, I think I was expecting probably to take out these highs because we went up, going down. Yeah, so we got that and that as our draw on liquidity, and we also got into the equilibrium of this whole range here with this candle. So on Monday I probably wouldn't expect much bearish action, even though we did end up going down, but like it started off here so it went down, but I think I probably caught a trade there or something. Here it is on Monday, Thursday. So Monday was here, this trade basically. So we got a 4-hour candle created, we got a 4-hour fair value gap created here. We also have a 4-hour fair value gap created here. We rejected that 4-hour fair value gap, like respected it basically. So that was a clear sign, a bullish sign. And even creating this fair value gap was a bullish sign as well, but we didn't actually break through this high yet. And then we ended up going through it here. We retraced into it during Asian session and it started going up. Oops, Siri just, that scared me. Oh my gosh, that was just Siri. But anyways, so the 1 hour. So on the 1 hour, we got that 4-hour fair value gap right here. We went into it. 13th of May is this one. So in London session, it's usually a continuation strategy. So I got that higher time frame POI right there. Higher time frame 1 hour fair value gap respected, and then we got a draw on liquidity as well. Clear draw on liquidity upwards, as I told you guys before. We got those two draw on liquidities right there. This was probably Monday's action, is just to go up, take that draw on liquidity, and then just go down. This is probably Tuesday, because probably we had news on Tuesday, so that's probably why it went down to rebalance. But on Monday I just ended up buying anyway. So on Monday I probably caught the top of that wick, that daily wick. So we got that high time frame, we got a draw on liquidity, and now we just need an entry model right here. We got a 5-minute entry model right here, 5-minute fair value gap. After rejecting this 1 hour, the entry was there, stops, and then just target. Oh, liquidity sweep as well. So liquidity sweep, I guess, is this one. But usually on the New York strategy, I look less for liquidity sweeps, but still there's like a liquidity sweep somewhere here, I guess. Like if you look on the 1 hour, you can see that this is sort of like a liquidity sweep, I guess, because it just like went down and just went up, but not exactly. But London session. Now it's Tuesday, London session, so we got GBPUs, that's it, and we got PPI at night. This is Tuesday's candle. This was Monday that we just went through just now. This is Tuesday. So again, I'm still heading for that draw on liquidity right there. So draw on liquidity still not out. 4-hour fair value gap created right there. And then first one not in discount. So this first 4-hour fair value gap was not in discount. This one was. As you guys can see, it was slowly getting disrespected, this one. So I will look for the next one. We went into that second 4-hour fair value gap. We also retraced into equilibrium of this range. As you guys can see, this is the trade right here on the 1 hour. This one was yesterday's one. So we got that 4-hour fair value gap again. And as you guys can see, before the 4-hour fair value gap, before a high time frame fair value gap, there usually is some sort of liquidity on a lower time frame. So we got a liquidity sweep here, and also this is probably Asian session lows. So liquidity sweep, tapping into a higher time frame POI, and then just some sort of entry model. And as you guys can see, this is the Asian session, so went down and then go up, targeting Asian session highs. The reason why I didn't target all the way up there is because we have PPI, so it went all the way down, collecting all this liquidity right here before going up. So that was our draw on liquidity, and we have a 5-minute fair value gap as well right here created. So as soon as it created, you can just enter. So that's the London one. That day, we have a New New York session trade as well. So PPI, after PPI you can trade as well. Again, targeting that draw on liquidity, because after PPI we already swept the downside sell side liquidity, right? So this was like a one shot one kill kind of thing. To be honest, I don't really know exactly what, like I know a little bit about one shot one kill, so I don't know this the exact one shot one kill strategy, but probably something a bit similar. So we got a 4-hour fair value gap right here. This was the London trade. Now New York, we can take another trade all the way to an even higher time frame draw on liquidity if you want to hold for longer. We got PPI. You're anticipating it to create the low of the week, because I was anticipating bullish price action for the week, right? Because we've got that clear draw on liquidity right there, as I showed you guys on the previous day's reflection, the previous day's bias. We got that higher time frame draw on liquidity at the top after we balanced that daily equilibrium, remember? So we just swept all this liquidity right here, creating the low of the week. Now I just look for it to respect, see, even this one, we respected this 1 hour fair value gap as well. So this candle, we respected the 4 hour, we swept all this liquidity, and then we still ended up respecting this one because of news. So we just went down and went all the way up and closed there. So that was a really bullish sign. Now you can go down to the 5 minute. There's a 5 minute fair value gap created right there. So as soon as the third candle closed, the 5 minute fair value gap is created. So you can just enter there for a 1 to 7 risk to reward, and just hold through for the whole week if you want, or just take the profits somewhere else. Obviously you would want to take profits here, probably other structure there as well. You would want to take profits along the way. Now 15th of May, New York session, we got CPI. So probably after CPI, it's within this one shot one kill trade, so within this higher swing trade. So Tuesday, Wednesday, so this one was the Thursday one. That's the trade right here, the small one. As you guys can see, there's a bigger one, there's a small one. So this one, you can see on the 4 hour, we've got that liquidity sweep right here, tapping into that 4 hour fair value gap and respecting it. See, when you see it tap into the fair value gap and respect it and come off strong like that, I probably wouldn't be looking for shorts, because we already tapped into an imbalance. So I probably wouldn't be looking for it to enter this one, even though this fair value gap was in premium of this range. I wouldn't look for it to head down because we've got such strong price action. Now on the 1 hour, there's not much created there. And then on the 30 minute, that's where we get that 30 minute fair value gap right there. And so during New York session, we got news, shot up, went down to rebalance into that 30 minute fair value gap. Then we can look for a 5 minute fair value gap entry. So there. So going to the 17th of May, I hope you guys can kind of start to see that the New York trades are probably pretty similar, and the London trades are pretty similar as well. Draw on liquidity right here, the higher time frame draw on liquidity reached, and it's Friday, so we can start retracing and head back down for that wick of the weekly candle. Usually a candle is like that, right? So the top of the wick, we've already went all the way up, so we can start going down now for the week after we did that. So Friday, this is Friday, so I was anticipating some sort of retracement, no heavy news. So it's Friday's trade. On the 4 hour, you can see we created a 4 hour fair value gap. No break of structure yet, but we created a 4 hour fair value gap, and we did tap into it. As you guys can see right here, we tapped into that 4 hour fair value gap and started going down. So obviously I would be anticipating bearish structure, right? So this is that trade right there. 1 hour, as you guys can see, Asian session, that tap of that 4 hour, and then Asian session we created a fair value gap as well. And the reason why I didn't wait for it to sweep all the way to this one was because this indicator is actually a little bit not accurate, I think, because it starts at like 6 p.m. or something, but Asian session starts at 7, I think. So you can count from this candle. So I think we did sweep this Asian session high right there. So sweep of Asian session highs, liquidity, higher time frame 1 hour, and then this probably balanced out this range, and then this going down, this probably balanced this range as well. So it's pretty balanced action for it to continue downwards. So 1 hour fair value gap and order block right here, and just a 5 minute fair value gap created, as you guys can see right here. So this one, the third candle closed, so it's a 5 minute fair value gap created, so we can enter. And then this one was a market structure sell model, right? Because it was literally going downwards and it's going back into that retracing. So market structure sell model, if I was to take full positions off here, the risk to reward would be like 1 to 1. So I just use the market structure sell model to use the standard deviation 1 to 0 of that range right there, and you can target at -2. I realized that usually at -2 it kind of reacts off pretty well when you use market structure sell model. So don't know the risk to reward, but probably like 1 to 4 or something, 1 to 3. Now going to 20th of May, it's a Monday, so and no news. Continuing on, this is the 21st of May candle, this is 20th of May candle. So continuing going down, disrespecting this one. So we were previously going down, creating downwards momentum, and then we got this 4-hour fair value gap right here. It did tap already on this candle as we saw last time, but there was still an imbalance. So if you mark out from this wick to this wick, there's still an imbalance, so it tapped it. So that's where we can look for shorts. And more importantly as well is tapping into that order block right here, this 4-hour order block, because this one tapped into the 4-hour fair value gap but not the order block. So after this tapped into the order block, it started going down again. We have a 1-hour fair value gap right here that we tapped into and respected as well from this candle. So from the next candle, we can kind of start to be bearish because we got a 4-hour fair value gap and a 1-hour fair value gap, and it's respecting both. Look at all these wicks, and this is order block as well. 1-hour order block, 1-hour fair value gap, 4-hour order block, 4-hour fair value gap, all getting respected. So that's pretty bearish. We also swept Asian session highs, so that usual Asian session high sweep right there. During London, you can just look for fair value gap, tapping into that fair value gap and just entering right there, targeting Asian session lows. Pretty standard. I don't think there's anything extra for that one. Again, another London session, so Tuesday, that was probably Monday, this is probably Tuesday 21st, so this is Tuesday. No USD or Euro news. I'm still having a bearish bias overall, but we already went down and swept this low, and we got this turtle soup right here. So we got a liquidity sweep right here, and look at this close. It didn't want to close below this low, so I probably want to target this weak high because this high didn't create a new low. That's why I entered long even though I was short biased. So that 4-hour liquidity sweep right here is a higher time frame, like sort of bias. Now we got a clear draw on liquidity as well, which is that weak high. 1 hour again, clear draw on liquidity and clear sweep of liquidity as well. And also we got a fair value gap right here, but I wouldn't really be considering this fair value gap too much because it's not like this fair value gap is going to cause it to go all the way up. London session, instead of a sweep of liquidity, we've already got a sweep of liquidity here, so just a entry model, draw on liquidity and higher time frame being 30 minute right here. As you guys can see, we got a fair value gap right here, respected it once and I respected it again. So the third one I found a 5-minute fair value gap probably. Yep, so this one 5-minute fair value gap right here, or even right here 5-minute fair value gap, tapping into it. So this one, and then just stops below this low and then targeting that weak high I was talking about. So again, pretty much like the same thing, even though it's not exactly sweep of Asian session lows, but during Asian session we already got a liquidity sweep, so that's why we don't need another one. So 22nd is just Wednesday, again no news. So 22nd is this one. So again I was bearish. So since this is like chopping around like right within this, it means that it probably doesn't want to use this fair value gap to go up. So my next draw on liquidity is now this low. So on the 4-hour, again, that respecting of that makes me think we respected this and it's now going down. So now on Wednesday, my draw on liquidity is this. This is my Wednesday trade. Respecting liquidity sweep right here, going down, another liquidity sweep right here before going to our draw on liquidity. It's the Wednesday trade, so like barely sweeping that one probably, and then tapping into that 1 hour fair value gap as well. Just the fair value gap right here, taking the equilibrium from here to here, you can just sort of enter around there within that fair value gap. Although this low was already taken, but we got a clear draw on liquidity, so, and no news later that night, so it's not like we were saving the move for anything. So that's that trade right there. So we got a clear draw on liquidity with that clear bias, because we see from the order flow that, you know, we're respecting 4-hour bearish structure. So, and 5-minute we got very clear break of structure as well. So entry model, we got draw on liquidity, we got higher time frame sweeps and stuff, and we got liquidity sweep right here, sweeping this Asian session high. Sorry, this is 24th of May. So going to 24th of May, we got this 27th, so this is 24th of May right there, tapping into that fair value gap and respecting it on the previous day. On the 4-hour as well, I think it's somewhere around here. That was the trade. So probably sweeping some sort of liquidity here, and then on the 1 hour, as you guys can see, this is the trade right there. So we quite literally went all the way down and then started going up. So Friday is sort of like a more retracement kind of days, as you can see on the previous Friday that I went through in one of these reflections. It was the candle, the weekly candle, you can imagine is already all the way down. So you want to retrace a little bit to create that lower wick. So on Friday, that's what I took. But this news is wrong, but I don't think there's any news on Friday. So we got a 30-minute fair value gap right there. So it's a New York trade, so 30 minutes fine. It's a continuation up, so 30-minute fair value gap for a higher time frame, targeting this 1 hour order block right there in case it wants to go down. And then entry model is a 5-minute fair value gap here created with a break of structure of this high. So 5-minute fair value gap created right here. And yeah, going to the last day, 28th, this is the Tuesday. USD news at 10. So it's this one. So it was a short after taking out this liquidity. When it usually takes out higher time frame liquidity like this, I usually would like to look for a short, whether, well, obviously with like correct confluences and everything, and with signs of weakness, because whether we're going upwards or whether we're going down, if we're going down, then we can just short here and it will just go down like this. Even if we're going up, after taking out some sort of liquidity here, it will probably go up, retrace, and then go down. So this is why I take shorts there. Targeting Asian session lows and a 4-hour fair value gap to retrace into. Yeah, so it's kind of like a retracement kind of trade, not really a reversal. So we're targeting in a 4-hour fair value gap. So this is a 1 hour, so you can't see, but we've got liquidity here, we've got Asian session lows, and we got a 4-hour fair value gap. So Asian session lows around there, because as I said, like this indicator is not entirely accurate for Asian session. We swept that and then we respected it, sort of like we didn't close above that high with this candle. That was another bearish sign. Fair value gap created, so just enter and then just target that low. Kind of like a PO3 as well, like accumulating, manipulation, and distribution downwards. I hope you guys do this kind of things for your own as well, for other pairs or for your own strategy as well, just reflecting and looking at how it would have played out and comparing it to what you did. That's all for today's video. I hope you guys enjoy this kind of videos. I'll put another one out probably later this week on NQ.